Hello, this is Matt on the Moon Lambo channel. Well, we have yet another report in crypto media about Ripple co-founder, who is no longer with the company, Jed McCaleb, dumping even more XRP. Look at this headline. Former Ripple's Jed McCaleb dumps 259 million XRP. 502 million still in his wallet. Oh my god, the sky is falling. So, think about this. So this is happening. Where does the real dumping matter? What about the United States federal government printing the dollar into oblivion and just dumping that on the economy? Like what about that? What about debasing the United States dollar? Because that's done in a significant way. You can look at this 259 million that was sold by Jed McCaleb, and if you think that this is impacting the global price of XRP, there is sufficient data to prove that you are wrong. I have covered this thoroughly. Jed was dumping last market cycle when XRP ran up to $4. Jed was dumping the whole time XRP ran up to $2 this market cycle, and I personally still don't think it's done. He doesn't have the power to stop the rise of XRP if there's sufficient demand. If the price of XRP is down, it's because there's not sufficient demand. That's it. Okay, and there's so many other reasons, but in a nutshell, I think that pretty well proves the point. I'm not going to do it in this video. I've broken it down. There's so many ways to slice and dice this thing, but even that alone, that's enough to just logically think through it. Oh yeah, that's right. It has previously run up while he was dumping in it. That means it doesn't matter. So what actually functionally matters, though? What about the debate? Because look, this is one of the strongest reasons that people are pontificating about just XRP, not XRP specifically. Well, in some cases XRP specifically, but really I'd rather just say crypto in general. So look, before I go any further, I do want to be clear. I don't have a financial background of any kind. I'm not offering financial advice. You should not buy or sell anything because of anything I say or write. I'm just a dude hanging out on the internet who may or may not be wearing pants. You don't even know my current pants situation. And just making YouTube videos is a fun hobby. That's all that's going on here. But would you really, even if I were offering advice, would you want to take advice from a guy on the internet who calls himself Moon Lambo, who might not even currently be wearing pants? Good thing I'm not offering advice then, right? Here's an article from the Wall Street Journal titled, "What Happens to Stocks and Cryptocurrencies When the Fed Stops Raining Money?" Now, this is an interesting point of conversation indeed. If we're to believe the narrative that money's pouring into cryptocurrencies and this is a primary driver, what happens when the government stops doing that? And you say, and so when I read that, I'm thinking, whoa. What do you mean when the Fed stops raining money? Don't you mean if? Like, and even then I'm being judged. Like, there's no sign that this is going to, and even if they do, I think what they probably mean by this, having read through this article, they probably mean a substantial reduction, but you know, the Fed's always going to print. You tell me what you mean by raining. Probably, I would say it's fair to say trillions and trillions of dollars being printed. That they're making it rain, all right? And so here's the thing about all of this. Although this is a factor, I personally think like you are still going to see another crypto bull cycle. So to what degree this functionally is changing how much money's pouring in, for some people I would think so. This means something. Like I'm not going to completely throw out this thing, but what I've found, it's just been my experience over the last 3.5 years. Typically when you see narratives trying to explain something, it doesn't seem to necessarily make logical sense, because I'll tell you what, in terms of when this when this bull cycle is happening, like I think this was going to be happening anyway. In fact, these crypto cycles, they're rather cyclical, provably so, in fact. And some people attribute that to the Bitcoin halving because Bitcoin leads the market, and then the rest of the altcoins follow in terms of price action. So maybe you buy into that, maybe you don't. But even if you don't buy into that as the reason for it, the crypto market for its 12-year history has proven to be rather cyclical. So it would be weird if it didn't happen. And so, yeah, you can apply whatever narratives going on at the time. Okay, that's perfectly fine. And people do that specifically for XRP as well. And it never makes sense to me. I won't go so far as to say that it grinds my gears, but it does not make sense to me. Because you have all of this positive news, mostly positive news, in fact, for the last 3.5 years in terms of real-world adoption of XRP and in terms of Ripple building out RippleNet and on-demand liquidity, utilizing XRP as a bridge currency. Almost nothing but positive news. It doesn't matter. But then when XRP goes up in price and there's also still positive news, whatever the positive news is at that moment, that's what's attributed to the growth of XRP. I'm just sitting there like, oh, okay, so this one little story matters, but the rest for the last 3.5 years didn't. You know what it is? It's just humans making wacky, irrational human decisions, behaving irrationally in markets, FOMOing in and panic selling. That's really what's happening. That's a much bigger driver than any sort of underlying fundamentals. I certainly believe that here. And so then you get to the question, what's going to happen as the market, well, a couple things. Assume that the Fed's going to make it, stop making it rain dollars. Now, the raining parts, we'd have to, classify what we consider to be quote unquote raining. Certainly trillions of dollars, that's raining. We'd probably all agree on that. But there's that. And then what happens, if you're talking about a bubble pop type of situation. And so I wanted to cover a few parts of this. To veterans of financial bubbles, there is plenty familiar about the present. Stock valuations are their richest since the dot-com bubble in 2000. Home prices are back to their pre-financial crisis peak. Risky companies can borrow at the lowest rates on record. Individual investors are pouring money into green energy and cryptocurrency. Ding, ding. And yes, they are. It's my position that it was going to happen anyway. And so I am willing to question for myself, and I do, to what degree there's more people throwing in money into the crypto asset class as a result of this, and how much more are they throwing in? Now, those are unknowns for me. Maybe it's possible because, I'll acknowledge, this makes sense to me, but this concept of having crypto as a hedge, that's made sense to me before all of this nonsense that's happened over the last year globally. That's made sense to me since basically when I jumped into the world of crypto, right? So to me, that hasn't tremendously changed. There's more money being printed, but I still think that you're going to see this bull cycle regardless. Anyway, the piece continues. This boom has some legitimate explanations, from the advances in digital commerce to fiscally greased growth that will likely be the strongest since 1983. By the way, that's a solid year. That's the year I was born. Anyway, but there is one driver above all. The Federal Reserve. Easy monetary policy has regularly fueled financial booms, and it is exceptionally easy now. The Fed has kept interest rates near zero for the past year and signaled rates won't change for at least 2 more years. And I will say it's been interesting just seeing what's happening. I'm not going to get into politics at all. I'm just talking about pure economics here. But certainly in the United States where I live, there's inflation all over the damn place. Have you been to a grocery store? And improvably so. I didn't pull up data for the sake of this video. It just entered my head now. But I've seen all sorts of stats on this lately. What isn't up? I saw lumber was up something what did it go up, 600 or what would it go? I think it went, I can't remember what the price is now, but it went up some crazy percentage. You'd have to Google, but even lumber's up. Ketchup, there's shortages of ketchup, by the way. And so, supply and demand is certainly a factor as well here. But there's all sorts of things that are in short supply, and then inflation just in general. Pick a dairy product, my friends. And so I get it, and I understand why the narrative is what it is. It's just kind of for me, more so a question of how much more money's flowing in as a result of all of this. But I still think directionally this is where it was going to happen. And in the cryptocurrency asset class, it's just going to keep gaining steam the longer it lasts, the more clear it is it's going to stay here. And we are, as time passes, seeing more utility utilizing cryptocurrencies, even though the vast majority of them today, happy to acknowledge, aren't functionally being used for anything. But still, we're at whatever pace heading in that direction where it is increasingly being adopted. But anyway, they also wrote here in this article, in a report this week, the central bank warned asset valuations are generally high and vulnerable to significant declines should investor risk appetite fall. Do I need to translate that for you? We're in a bubble. Everything in existence is in a bubble, basically. Seriously. And for most of the last 3 years, I've been able to say, yeah, bubbles are forming. You can look at what's happening with the stock market, this or that, pick your asset class, real estate, housing. But I was able to say for most of the last few years, at least crypto's not in a bubble. But given that we're in bull territory here, even if you don't want to call this a bubble yet, even if you don't, where do you think we're headed? Everything is going to be a bubble. So then it's kind of a question of how do you just risk exposure accordingly. And I'm not offering financial advice, so I'm not going to tell you what to do, but I will say for myself here, I personally, as it pertains to crypto, I'm going to wait for this stuff to be substantially worth substantially more than it is today, and then I will sell, and then I'll put it in something else that I perceive to be less risky. And so, I don't know. We'll see how things unfold. But sometimes too, like you think like what happened last March, sometimes even the stock market, my gosh, the stock market crashed, and that made the entire crypto asset class globally tank. And so sometimes they move in tandem also. But I'm not anticipating you're going to see something like that happen with the stocks before the crypto market pops. I'm not seeing analysts predict that really in any sort of meaningful way. Those would be outlier opinions, frankly. I think you're going to see the crypto bubble form because it forms really fast when it starts going, and then you'll see it pop, and then the rest of the havoc throughout the world will happen. That would be my guess anyway. And then there was this too. They wrote in this article, the S&P 500 stock index now trades at about 22 times the coming year's profits, according to FactSet, a level only exceeded at the peak of the dot-com boom in 2000. So, translate that also? That means that the prices that you're seeing are not based on economic output. They are not in line. The stock market, it is not a representation of economic output. Not sufficiently. Definitely not sufficiently. Because if it were, think about it, like, do you think economic output in a general sense is better now than it was before all the global craziness happened, in the beginning part of last year? Well, the stock market seems to not care. People are they're putting money in it. But see, again, this is a speculative bubble that we're talking about here. That's what's actually occurring here. It's not about economic output. And so the fact that we're seeing this is not surprising. But you see this in bubbles in general. You can say the same thing about crypto, frankly. There's almost no utility, yet incredibly high prices for crypto assets. Over a $2.5 trillion market cap for the crypto asset class, about the highest it's ever been. But it's not based on fundamentals or utility. Well, the stock market, it's not either. But people will continue to invest in it. And whether people realize it or not, like a big factor here is that, and I understand that you can increase the quantity of a stock in existence, but in a general sense, there's a finite quantity of stocks, and so people are putting their money into something that's scarce because just keeping a fiat currency like the United States dollar, it's inflationary. It doesn't make sense you've got to put it somewhere that's not going to do that. And I understand it gets more scary when you're talking about being in bubble territory, but for sure the dollar is going to keep inflating, which means that you're losing purchasing power. That's unquestionably for sure what is happening here. So ultimately, it's like, what does this mean for the cryptocurrency asset class? Well, here's my opinion to sum this up. In the short term for this market cycle, likely nothing. I think it's not going to matter. The crypto asset class is going to do what it does. I anticipate we'll see the crypto bubble form and pop before you see any sort of popping of, whether you're talking about housing or real estate or the stock market. This would be my for fun guess here. Of course, world events can come into play, and then I'll throw my expectations on that out the window, and I would if something actually happened that would meaningfully change, or some sort of major divergence from a current policy position in terms of printing money, just monetary policy. Yeah, sure, something like that could make me change my mind. But if things just keep chugging along like they are, no, you're going to see crypto bubble pop first, and then it will be in a bear market. It's going to trade sideways, and then it's going to inflate again years down the road. That's what I believe, and hopefully with more utility in the future. But it's rough out there. It's like, where the hell do we put our money when fiat currencies the world over are just being horrifically, disgustingly debased? Well, you got to put it somewhere. I mean, that's why it's like I put a tweet out too. I was asking the other day, I was like, so when XRP moons and we have our XRP profits, like, where are you going to put your profits? What are you going to do? Are you going to invest it? Are you going to buy a bunch of fun stuff? What are you going to do? And a lot of people had some really thoughtful responses. Of course, there's the typical Lambo, this or that, which I don't mind. I'm not Moon Lambo, don't mind a Lambo. I'm just saying. But there's some thoughtful responses too in terms of wanting to invest in business ventures, put it into real estate, stuff like this, and that makes sense. I get it, because look, even though we're talking about bubble territory with real estate and with the stock market, even if there's a correction, you know what I personally would do? Like, say I shifted even more money over there, which could happen. I got to put it somewhere, either in the inflationary dollar, or I got to put it into something else, which is in a bubble. Well, I guess if that happens, even if you see a big tank in terms of price, which isn't a guarantee, but how big was the crash in 2008? Like 40, would it go down like 40%? I'd have to look at the numbers. I can't remember, to be honest, off the top of my head. But even if you saw something horrific like that, well, okay, I'm not a panic seller, so what I would do is recognize that now I can buy stuff cheap, so my new money that I earn, I will put more into that then, if that's what I want to do. And I'll be putting a bunch into crypto too. But yeah, of course, like that's the time to do it. And then you let a year or 2 or 3 pass, and then you'll be above wherever the dip was, however long it takes. Usually it's more like a year and a half, I think. So even if you saw those scary numbers, I know how markets work. I know human psychology, so I still wouldn't freak out. So like for me, it's like, oh my gosh, I'm freaking out. Where do I put my crypto profits? Well, if I put it somewhere and it goes down, so be it. So be it. Life goes on. I'm going to keep earning money, and then I'll just buy more stuff. And then after people stop freaking out, which they will, prices will start going back up, and then I'll be better off than the people that panic sold at the bottom, because I will not panic sell, because that's stupid, and there's so much data to prove this. You've got 12 years of data in the cryptocurrency asset class, and you got about 100 years worth of data when it comes to the stock market, showing that it's stupid to sell at bottoms. So I'm not going to do that. So if you're wondering what to do in general, I'm not offering financial advice. I don't have a perfect answer for you. I'm just sharing with you my general thoughts on this. And either way, like whatever happens here, it's going to be okay. Even if whatever you can imagine to be the worst happens, outside of nuclear destruction or something, fine. But outside of something truly catastrophic like that, humans are resilient and things bounce back. And so I'm optimistic in a general sense. This stuff, this isn't all going to just go away. Yes, I think there will be a bad end some point down the road for the United States dollar if monetary policy doesn't change, and I don't think that it's going to. But that doesn't mean that you're going to have hyperinflation even in my lifetime, and I'm 37 years old. I mean, maybe you do. I'm not going to pretend to know exactly what the timing of that will be. I'm just saying, as I've said before, we've seen this movie. We know how it plays out. When you abuse a fiat currency like this, eventually it is destroyed, and it's just taking longer because it's the United States dollar, which is the global reserve. But things are always changing, and you can't keep doing this if you want it to continue to persist. But the average lifespan of a fiat currency, I believe the number is 28 years. I'm pretty sure that's an accurate number. You can fact check me on that, but I believe that the average lifespan of a fiat currency, that's a government created currency, not backed by anything, 28 years. So we'll see, guys. You let me know what you think in the comment section below. I think it's an interesting piece for conversation. Always willing to be persuaded here, but that's kind of generally what my thoughts are at this particular juncture in time. But I will go ahead and wrap up here. I'm not a financial advisor. Do not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.